Good afternoon, all. This is take number 2. Our first one was a mess. My apologies. Uh, and gives us a chance to have more folks in. I try to get it started a little bit early. I got time bankruptcy problems. I just I'm out of time. Problem is uneven, unplanned growth. It just when you're hitting 80% a month in the ORB, it's just you're not in charge anymore. Yeah. Okay. It's pretty much a binary switch. Either just on or off. You cannot adjust in between. It's a rocket, and it's just too much. Thank you, sir. Welcome, Jamie. Anyhow, quickly, we first of all, many emails last couple of days, both last night, this morning. One of them was Tom right here. I was blushing at some. You gotta realize I was lucky. I was at the right spot and lucky. On Friday, our chief moderator, Peter Cook, who's a ferocious reader, I've mentioned that several times, and backtester, and PlayStation Guru, and also does moderation for our chat room. And now we've taught him how to do the servers updates in case I'm step off from my ballast station, because we run 3 servers from here. And he's amazing. He came out and said, it was like 12, it was like 2:30, 2:15, something like that. But an hour and a half to go for the future. It says, listen, if SPY holds around here, 2% up for the day, this low, in the last 30 years, this happened 19 times, of which 94% of the time, we have 2 more big push days. Then it dies. It's the event day. I remember that. Went back, look at his chart section there, and I said, guys, if that's the case, we're going to be on the watch from Monday on, because we have a good setup here with long from like late September, a couple of shakes in the SPX, this process here. And here we are, this is Friday, we're near the close, outside bar, complete taking these shorts out. Took them out to pasture and shoot them. Boom, done. Or shot them, done. And so the next 2 days are crucial. If you extend, I'm extrapolating with my machine. And by the way, earlier in the morning, I said the following on Twitter. This right here, this one. I said my daily SPX target is at 3875, which is 50 bar and 2.5 sigma confluence. Look at it, you'll see this morning, early in the morning. Okay, 3865. I said by the time we get there, it should be reading about 3875, just approximation. And look at the reading there, 156. Well, if we go to the chart here, this is yesterday close. You notice where we were, 215 on that. So, but I prepared some of my affiliates, as you know, for transparency reason. If I put a friend or family in something, usually the stock, they don't trade options. They're not that fast. They're not this. And I got to get hold of them. They got to make a mistake on the exit. You know, it's easy to say, buy Tesla or buy Microsoft, or and they're usually investment grade names. We don't do any Bawa stocks. They're typically S&P 100, NASDAQ 100 names. And my instructions were, in the afternoon on Tuesday, if all other things being equal, I see a chance for us to take the cash out of this run we've been. You got to exit. No ifs and buts. It's all out. A couple of them panicked, like, do you have to pay taxes? I said, no, you don't have to pay taxes. There aren't that much. Look, we've been in and out these areas. But short term, yes, it is short term. But I'm not a tax advisory. I'm not a CPA. I'm getting that from my cousins. How do I do this? I said, get your accountant. One of them is in Canada. I have no idea how Canadian government handles taxes. I don't know much about here. I have somebody do my taxes. I don't do it myself. I have no clue. You just tell me, sign here, here's the check, go. So my point is, our instruction was to get out, and they did flawlessly. Of course, you know, I was, I think probably charts are showing, yes. Oh, again. Guys, sorry about this. I'm a schmuck. I'm sorry, guys. This is no good. Gonna do it one more time. 3, 2, 1. This is take number 3. Time is 5:18, October 26, 2022. It's Charles Arbon in Persian calendar. It's Charles' birthday. And in the better days, I would be at some getting ready to be at an embassy party on 3005 Mass Avenue. And everybody was there. I mean, they had to be seen. They had to be seen. So, because Elizabeth Taylor, Kissinger, this, that, they're all there. People, like George Jewish staff, all these guys were Trump. Anyhow, now I'm in Florida trying to make a buck. Hang out with people like Mr. Petrucci. No, real live, guys. Here you go. I can see it's real live. It's screen changed. There we go. So, Mr. Petrucci, have more vino. Okay, thanks. Anyhow, so what happened on Friday? We had a near about 12. I'm saying about 2:15, 2:20 in the afternoon. Peter Cook, our chief moderator, who's a ferocious reader, big back tester, all kinds of way of looking at data, and the quant guy with a process control engineering from I think it's GIT, Georgia Institute of Technology, came in and said SPY is up 2%. Last 30 years, we've had 19 cases of that. Then we closed at 2% or better on SPY, but with a market low. We have got a market bottom. It's more of a, obviously it's had to qualify as a bear market rally. It has 2 more days of gas in it, and then it's going to be out of breath. Okay. And so I said, okay, so it's going to be Monday or Tuesday. So on Tuesday, on Monday morning, on Tuesday morning, we posted the following on Twitter. It was at 9, it should be in the bottom down here. Should be, 9:36 a.m., okay, on Tuesday. So we came in and said, here's the chart. We expect it to hit this level. If it does go, because we already made the first day, and if it gets there, we got to get out. We're going to close our position. We're going to book something like 160 handles on S&P, and hallelujah. Well, here's our chart there. Let me open that chart. Do we keep track of it? I know one of you guys had asked, can I get a copy of this? No, you cannot. But we can give you a snapshots of it, because I don't want anybody touching the files. But yes, we can give you, this is how we track of our positions. Every position that goes trade session gets logged here. It's all closing basis anyway. They keep it simple. We're not trading ES. We're trading ESPX at the close. So we said about 166 handles. That's how we ended up. That's the closing. But around 2 in the afternoon, 2:45 in the afternoon, we sent a copy to all PMT saying, whatever is the close, we're out. Because the 5% rally, we got to take it. We have had 2, 4, 6, 7 trades. All winners for a total of 1,000 S&P points, long and short, back and forth. Okay, that's about 10,000. That's about 10,600 in Dow points. Usually it's 2 to 1. That'd be 10 to 1. Okay, and we gotta book this thing. We're gonna be done. We're gonna be gone. Well, this is how we closed. Let's go over here. This is how we closed yesterday. I mean, if I go like this is how we closed. And we talked about, hey, Wednesday would be event day. Something is going to happen in between or on Wednesday. So because it's a cash trade, we got to get out before 4 o'clock. My last trade, and Cash, correct me if I was wrong, or Anita, you guys were in the room, or Mr. Petrucci, you were in the room, Bruce was there too. I think I left the futures with the NQs on with about, I think 35 to 45 seconds. I mean, it was 3:59:15. I threw the last tranche out. My fear was not what's happening. I had no idea what's going to happen. All I knew is that I don't want to have. I had a couple of NQ trades on in segregated accounts. One of them was a NQ, not MNQ, NQ. And this NQ, yeah, mainly was MNQ. The one account was NQ, it's a little bit larger. I said, I have no interest going to the close, past close, and get a call because they would call you like, hey, you schmuck, get out now. You got a margin call if you seconds if you're down from the trade test. And they have the accounts in front of you. This one, that one, this one. I didn't want to go through that. I've done it. It's not pleasant. So I said, we're going to peel off, and it's a rocket engine going up. I said, this is it, Farry. They're juicing this up. Something is wrong. We got to get out. We had 45 seconds about. We went to zero. The count went dropped to zero. I usually take the dope and throw orders at it in front of it. And because the way algos work, you got to understand the order flow. It sucks it up. And then it lifts the boat. So I started selling small, then bigger, and then boom, the last piece. We did that at 3:59 for 15 seconds almost. We're out. I think it was Anita. Somebody yelled in the chat, Microsoft and what's his name? Google's next. Well, Google, I know. Microsoft waits when they give their earnings. Much bigger stock, a more stable stock too. Google's always sends it at 402, 2 minutes after the close. I remember a time when I was long I was long 100 points spread above 3 sigma. This is Google, okay. I was long from a call spread from this level 100 points. I bought it for like 30 cents. It was nothing. Everybody thought I was a sucker. That was priced that way. Who is this idiot who's buying these? Yeah, let's sell it to them at 30 cents. So I bought 10 contracts, cost me $300. Guess what? It went there. The total time, that's a lottery ticket. This was October 13, 2013. That lottery ticket lasted 12 minutes. You know how much it's worth up there? 11,000. Some of those guys who sold that position to me didn't go to work next day because it was a part of option package. It went to a lot of people, and PTI executed all of them. Well, majority of them. And there was a fight over who gets full allocation. I told him, get me out of this. I'm not involved. You're the broker of record. You manage that. You know what the gang order you send out, and give a ratio. Do not do any priority. One guy said, I've been with you so long. Wait a second. It's not a boyfriend-girlfriend relationship. You have the package. They issue the order. If it gets a partial fill, you're going to get pro rata or distributed. It has nothing to do with how many other trades you win with us. Anyhow, but that's how it could move. It could move. Well, this time was the other side. The cloud missed, the ad missed, and then Microsoft missed. And now today, FB missed. So today we do have event day. So I appreciate all the emails last night and phone calls, text, all that. But guys, I'm out of pocket time-wise. Okay, I will try to get back to most people as far as I can. Those I cannot, I'll do by the weekend side because we have a development schedule that's ongoing and we're expanding a few things. And without getting into any of those details because sometimes they don't work, I don't want to get ahead of myself. But I appreciate all. I don't ignore anybody. I will get to everybody, worst case by the weekend. But we're out and we're flat. Now, I want to say this. PMT is an event-driven product. There is no quota. If you read somewhere, it's an error. We'll fix it. Because we have to look for setting up of the trades, both in the cash market, which this thing shows. Let me go to snaps. Okay, let me go here. This is the cash market. This is the cash market, this one. Okay. And then the option on top of it, which is the pro. By the way, these points on S&P are when we're engaged. If we're flat, we're not plotting that. We can't. Why? That's how time and digest works. It's anchor. Your entry point is the anchor. Okay. So each advisor is different, each market timer. So you have a massive model that runs that. So anyhow, we're flat as of yesterday close. When do we go back in? By the way, that's our yield. This distance, okay, this distance. If you've been from the first trade here, which was about 140 trades since when we started tracking it like this, and there was involved with it a moderate to medium-sized indicator change. I think Rich probably remembers that. I know Dennis will remember that. This was in Chicago. Matter of fact, if I go to my Excel sheet, there you could see 167 trades. Okay, that covers about 235 trading days. So our average signal is about 12.2 days. Trading days. Okay. So we don't count holidays, just it's there. It's just 5 days a week issue. So we'll wait for the next setup to give it another try. I don't know which way it's gonna be. It certainly is not up here. I don't want to go short, necessarily go short here per se. Definitely don't want to do a long. It's against all long parameters, protocols. Maybe possibly short, but typically when I take that kind of an order out, I just waited 2 or 3 days, maybe a week. Let the dust settle and see where we go. So, but that was 366. Now, also on the website, we are beginning to put all the stuff in as promised. Why? Because we're doing a little bit better in terms of time. Even though I complain about time, we're catching up. Cash has joined us to help us pretty much any hours of the day. He's been very gracious. Nancy's doing better. And of course, Admiral, he brought some clients in. I told him, you got to take care of them because I don't get it. And so we try working together. Here we go. That was the exits. It went out on Tuesday in the morning of last week. I'm sorry. That was the exit of the pro issue. Yeah, that was it. Why? Back then, let me adding these in. So we have a full sense. Here's the letter to them. Boom, boom. So I need to add to this the exit order, which was some of you guys, by the way, you didn't get it. Let me address that too quickly. 1 second. Let me freeze that for a second because I'm opening emails. Just privacy issues of others, not mine. Okay. Here's the. There we go. Oh, no, that's not the result. Hold on. Okay, this is it. Here we go. This is what we're going to add. Let's see. This is what we're going to add. Boom. We did at this time of stamp. Okay? At 247. This is what we add, and we said all good things must come to an end. It was actually 166 handles. By the time the close happened, he was before, because we were already out of the pro, the option trade. I just sent it to both groups. Boom, boom. Let it go out with you guys after a copy is sent to Timer Digest. Okay. So this will be added in the website on this page. So you have on top of it, come a stack on top of it. So the timestamps for, and that closes issue 366. The next one, again, also, what are your option trades like? I said, just take this and put on steroids. Because the option is a defined risk. Yes, we're gonna have some losses, but they're very small because of because of tight levels we give here. Okay, right here, right down here. These are levels. We do run it based on SPX levels, not SPY. Even though we're trading SPY, why? The index is much better, more stable to time and used as a stop versus a jittery name which could be manipulated. People can buy and sell SPY a little bit, not a whole lot, but you can't do that with SPX. It's 80% US equities. You can. This is the biggest boat there is. If you can master this, you can master anything. So we're going to add that in, and then we'll wait for another setup. Okay. Again, I don't want to take credit for that. This took a little bit long. This is where we took the option pro trade on the option, because it moves so fast. Remember, in option, your price and time has to move your way logarithmically. Are you with me? Logarithm. You can't go straight linear. It doesn't work. Look at the Black-Scholes model. So when it went through this, we took it out. Just like this one, some of you got out. Okay? And we took one out. We took a loss here, went back in, and took this one out. For the option, this was a cash. Now, why didn't I put another option trade there? We have in the past. Sometimes we have a signal that is good for a while, and we take 1, 2, 3, not against it, bias. Same direction. We have done 2. I don't think we have done 3 yet. Nothing will last that long. But when we are basing here in the marketplace, like let me come here like this. We're basing here right now. We tested the 200-week moving average. That could happen, and we could see more than one signal, more than one trade per signal. Again, we're event driven. We don't go by any quota. If you're looking for option action, you're in the wrong package. You want the HA options. That's more rigorous, managed by 2 or 3 people, plus there are ins and outs. That also could be auto traded. Its results this year have not been stellar like they have been. Why? Because of rebasing and this inflation issue. There's a lot of tug of war back and forth. But shortly, I think we could stabilize there. And we're also changing our protocol there. When you get into trouble, it's like falling from your bicycle. It's not important if you fell from a bicycle. The issue is how you get up. So we're going to adjust that a little bit. But the PMT has one trade. Somebody asked, how can I get more trades? Not on base PMT. And remember, it's a very clear setup. So it's event driven. It'll take a while to another event to line up. If you need action, you can do 2 things. You can do the HA options or you can go to Vegas. But you can't get in PMT. PMT is market timing. And the purpose is very simple. It's for people who are managing retirements. And should they be in or out of the cash position for the basic and a little extra juice, we add the PMT Pro in there, which is one SPY trade. Okay. These are spelled out in the web pages. I'm sure you're gonna miss it. That's why I get the email. I understand. I created this monster, and by the way, someone also asked on Twitter, how many people follow this? It doesn't matter, but there are hundreds. At one point, we're at 400. Some pulled back. That's okay. Part of it is because when I launched the ORB, I fell behind in upkeep, and some fell back. But that was 2 years ago, a year and a half ago. But we're up there, several hundreds. I think at one point we were a little over 400. But here's the thing. It doesn't matter. Why? We're trading SPY options. The spread is penny. 1 penny. A caller put at the money, the spread is penny. 1 penny. With the OI in the 10,000 to 20,000 range, typically. So you should have no worry. That's not the issue. It has plenty of room to grow. It's not like NQ. NQ's got some limited package in terms of what do you call it, volume. But there's nothing like a SPY. There's nothing. Not even Qs are that big. And so, and there's a lot of internals. A lot of people trade it. They're Arbit. They buy it like my sister. She buys it and puts it in a shoebox because she has a hard time selling. I think she still holds the Qs that she bought in 98. She has a hard time selling, plus she doesn't need it. So all in shoebox. And also, I mean that because she also doesn't want to have a stock in the hand of a broker. She writes to them, says, send it to me. Once in a blue moon, she wants to sell something. She'll FedEx it a couple of weeks in advance, shows up on her Charles Schwab, and then she goes and trades it out. Yeah. So that's not the case here. All right. Let's go to our first step, which we should do. We have 5:36. I don't want to run too late. Again, we had a couple of mishaps for the start. Okay, this week is the 4th week. Obviously, tomorrow is a big daddy of them all. Durable goods and GDP. So be around. 8:30 is going to be a lot of fireworks. Of course, jobless claims. On GDP, I think Atlanta Fed came out. Was it yesterday or this morning? They actually upped the story. I think I put it here. Hold up. No. I think it was this chart. Hold on. No. Hold on. No. I forgot. There. No, it's just right here. You might want to read that. You should follow us at Hamzy Analytics. It's the fastest way we get to people. This one. Atlanta Fed. Yeah. 3.1. They upped it actually. Now, I'm not saying they're right or wrong, but we'll see. We'll see what actual number comes. And also look for revisions. That's crucial. So what are they expecting for tomorrow? 2.3 range is that. They're thinking 2.9 to 3.1. And then you have PCE, favorite of Bernanke. You want to keep an eye on that too. Wow, look look at that 0.6. Part of the problem is unemployment is too low. Now we got a bunch of kids, or grown men, I should say, who don't want to work, and they're staying with daddy. I mean, it's ridiculous, but that's what they're doing. But of the people available to work, given that, and there's also a little bit of error there, but there's 3.5. That is fueling the inflation. It's not going to be easy. Oil prices are a little bit down. I didn't want to release SPRs, but I'm not in charge, so who cares? Because at some point we have to buy it and put it back in. But we'll see what that number brings us. Hold on, tomorrow. Let's see. What else do we have? Durable goods, one of my favorites. You know, airlines, refrigerators, things like that. Autos, these are crucial. Extra position, X core capital goods. 16622. Yeah, wow. Yeah, so yeah, I think we're coming out of the shock of the interest rates. By the way, I don't think they're going to raise rates much. They may be already done. Maybe we'll see a quarter. Yeah. Why? Liquidity issues overseas. Dollar's so strong. You know, was it last week we talked about 3 days in a row? Bank of Japan had not floated $1 of their bonds and 1 yen of their bonds. I don't think it's denominated 1 yen, but I don't know the scale. But yeah, nothing, zero. Look at Bank of England. So for Jerry Powell to come in and be a cowboy and try to play Paul Walker #2, I think we'll have a major mess on our hands, and you're gonna have a major drop in employment. Unemployment will shoot up, and so forth. Now, on the other hand, argument is, if you look at what Paul Walker did, some of you probably were around at that time. Some of you were in diapers. It's okay, but the premise was you want to go double the rate of inflation. If you believe inflation is at 8, you think we can handle 16% on a front end of the curve? I don't think so. This is the front end of the curve. Okay, this IRX, about 4. That's 4 times of this. I mean, it would be a massive recession, massive. So I think it's probably dawning on him. That's what the bond market is telling us. Remember, the smartest guy in the room always your bond trader. It's not the S&P. It's not the Nasdaq. It's not the guy with the system. It's your bond trader and an HP calculator, business calculator. So I think they're figuring out now. Yes, Fed is out of bullets. The portfolio is too big. By the way, it's the largest hedge fund. I'll call it the largest Ponzi scheme. You can call it anything you want, but we're borrowing to pay the interest. That's not a definition of Ponzi scheme. I don't know what it is. So I think it's going to put back market sensing that, but it won't be a straight line. All these markets are non-linear systems, especially bonds, and so it's not going to be a straight line. It's going to be a complex system. It's going to have fear and greed factors and back and forth. So are we in a bumpy ride? Yes. I'm happy about it. Absolutely. Why? Because of this, Jack. This is our system. It lives and dies on volatility. So you give me volatility, this thing will continue to kick ass. Look at the number of days. Look at the start date. We don't even extrapolate this into an annual because people would say it's too good to be true. But we have the trades and we have backup for each single trade. Trades on StoneX and all that. And every day is updated with the help of a couple of guys who have the statement. I don't even touch it. I just make sure the columns and rows are correct in terms of the control volume, colors, and so forth. Control columns and rows. So this data, which is computed from this, you'll see, it's computed from every day it's coming in. These are in the view mode, so people cannot touch them. But these are the control columns to compute this. Today didn't trade is that. If you go to NQ, start about a month later. We started small because we didn't know this operation there. We want to be careful. And his friends and family really put their money in and it's exploded. So as long as volatility continues, I'm fine. Oh, by the way, we lost money in July. Once a year it loses. We lost money in July, about 3 weeks ago, and then it was treacherous. We made that back and out. Well, look at this at peak equity right now. So did not trade today. We'll see tomorrow. So do I like the volatility? You bet you. How do I keep track of it? Our indicators. Yeah, I keep an eye on all kinds of stuff. I look at SQ. I look at the walls. I look at what do I see uh, on our this game. Look, this is also turning. You know how much I adore SP2. Probably better than most gorgeous blonde here in Southern Florida, because this baby does not talk back and prints money. The blondes, they do talk back and they consume money. Isn't that right, Mr. Petrucci? So it told us we got to get out. And we were right above that before the close yesterday. So now, today also, MetaMist, we got, what do we have? Amazon tomorrow? And then Apple next week, or Apple tomorrow, Amazon next week, something like that. This bloodbath will continue. And you could see on the spread, look at the VIX spread. I mean, it's just sinking, saying that we're near the high, but in trouble area. We did not make the rendezvous there, but we should. I doubt we'll go past 200 day. There's going to be a lot of fading done. We're still basing down here. The biggest problem I have, we don't have a big volume day. I was hoping CS will go down, Credit Suisse, because they were at the ledge. And you know, I don't like anybody to go down, but I think from the candidates who are on the ledge. So, so when we get, what was this? Excuse me, Rich, what are you talking about? What are you thinking? Excuse me, expand on that, Rich. What was that? So if you knew that I was going to exit, you mean? No, but Credit Suisse was that limit. If it goes, it goes because of, let me kill this, because of the just sheer size. But they sold a bunch of the secure section, secure products, because they need to raise capital. They're in deep trouble. So very quickly, timer. You could see where we are. You could see a reversal. I think the biggest problem is going to continue to be NASDAQ, another 2% down. Probably tonight I'm going to see a few folks at the cigar bar who are bleeding, absolutely bleeding, to the tune of 400,000 a day now, because they're all knuckleheads. That's all. Never bought insurance, never bought puts. Oh, too expensive. And then buy their thing dip is going to go back up. They bought too much. It's not going back up. So most likely my next trade is going to be on the short side. But again, I don't want to jump back and forth. I don't like reversing. Most of the time when reversing, you do it emotionally. So what you want to do is let the dust settle and move forward. We're extremely overextended here on the upside, so it's possible for us to pull back. Again, we have not seen a volume explosion on the bottom, so that's missing. Most professional traders are not going to go all in. If they nibble just a little bit, these bear market rallies and sell into it at the end. I probably sell trading wise starting tomorrow on the short side. Today I not trade. The system doesn't trade, and also I overslept. So if I don't feel right, I don't trade. I'll keep because I keep journal. I don't want to leave a witnesses or evidence like that. Oh, my head is sleepy. I got up late, and then also I get into a bloodbath of my own making. Not doing that. So I said I'll take care of my personal stuff, which I usually do on Wednesdays. Get a little bit of rest, go to bed early, and then we're gonna knock him out of the ballpark tomorrow. Again, pick your spots, trade small, and don't be greedy. Bulls and bears, no pigs. Canaries. Okay. Very nice move by Transportation there. We are above 50 bar. Okay. So does Russell, but Russell come back to test it. So if we go to D-Trender, this should be very evident. You're going to get a mixed bag. They just pulled up a tiny bit. these two. We failed here, right at 50 bar, which we had declared as a target earlier. If you go back 1 or 2, I believe, webinars on YouTube, you'll see what I talked about that. That this could be an area, of course, it's a moving target. All of these are because of moving averages. So, but not a bad idea every night, just take it quickly. This is the trender. You can write this up a little code yourself. Take the price from the 50 moving bar average, and you get this chart. Minus 200, you get this chart. And the best way to look at it is blow them up so you can get the parameters. Very empirical. There are no set parameters. Okay, it works until it doesn't work. So very empirical evidence. You got to take a look at it and keep an eye on it. Okay, 2 simple trend following system. Oh shoot. Oh Murray. The weekly's on a sell. Oh wow. Oh wow. Okay, and the daily's on the buy. This will succumb to that usually. Yeah, this nature is that there's a slightly different system, just a forfeit, but the concept is the same. Trend following. Look up John Henry, the guy who owns Red Sox. It's the same concept. He started with 100,000. Yeah. Up. So 1 second. Callahan. Oh, that's what happens. Yeah. You remember Dirty Harry? Yeah. We'll do, Richard. We'll see you. Up. So this usually vibrates back and forth and then gives into that. And this does not change that often, but it has just gone to a buy and got annihilated, went to short now. So be careful. Yeah. We're also overbought there. Again, hold on 1 second. I'm in a webinar. Okay, now, but no, there's actually was another machine. There was a person. I got his number. I'll call him back. So, we're not rising yet. So maybe we'll continue a little bit more. This is low. This is floored. Yes. This is all good signs for the upside. But very, very short term, we're overbought. Very overbought. Here's a cross coming. I don't see it as really it's a very minor bullish divergence. If you look at the levels there, lower low, slightly higher indicator, not robust, not as robust as I want. The same thing almost here. Slightly lower value here. Slightly lower, a little bit more pronounced on the CI. So can we go higher? Yes, we can. What's the odds? Not very good. Probably I'd say, 4 or 5%, 10% to go up, 90% to go down right now. So that's why wait for the dust to sell. Just in case I'm wrong, because we're gonna be wrong. Trend change is the toughest area to trade. Don't kid yourself. Okay, VIX, we've come down quite a bit. We had some VIX calls. We made a little bit of money, if I remember. And we got out. Why? We never went past 33. And our goal was, I think 35, no, I think it was 32 and a half to 37 and a half. Never materializes. And the best thing is to get out. By the way, these are wrong. This data is wrong. They got to clean that. The lows were not this low. I think it's a computation issue at CIBO. I've been in a conversation with them, an index operation there, but they haven't found what they're doing wrong yet. Once they do, you're going to see this chart change, and you got to do a control on your charts. Let's go to a skew. Okay, wow. Yeah, see? That's another one. If we go down, even the big boys are not ready for this. They're taking all the bets off. They'll be coming to all-time low on skew, which is what? It's a tail risk on the put, out of the money puts of SPX. So when we get these high readings, I would be careful of the downside. This is about to. So it could be. Listen, we're looking for a signal. Next week is FOMC. As a matter of fact, next session will be right after FOMC. The first signal that they say, hey guys, we can't tighten anymore. We're in a precarious situation. You're going to see 150 point on S&P day. Do we want to be on board? Maybe. But today we just want to get the dust settled and get out. Let's see what tomorrow is. Then I can re-engage probably. Um, I don't like to do Fridays, but we may change our bias Friday. Or may issue a new bias, I should say, and or Monday, and then do the trade on. I don't like to have a position in the not FOMC. Yes, you get a good chance to make decent money, but equal chance of losing decent money. It's a two-way street. I usually have learned not to be in the market with the futures, other than very, very mechanical, extremely mechanical, because human being and your expectations are usually false. It doesn't work like that. So I would be careful there. Treasury yields. I think we talked about that. This is a 5-year or seven. That's 7-year. I think it's a 7-year high. Hold on. How much data we have? It's an all-time high for that period. 5 years. That's a 5-year high. Okay. So you could see what a rise this thing had for the last 1, 2, 3. Yeah. At some point, it would be not sustainable. We'll probably pull back. The concept of Volcker was twice the inflation yield. Uh, Even if we go up, inflation has to start coming down for them to get to twice. We can't go to 16% right now, just because the inflation is at 8. It's here's the problem: interest expense. When Volcker did that, we were about I think about $9 trillion in debt as a country. We're over 30, sub 31, 32 right now. So short-term interest to go that high will bust up our own budget. Forget about training and fuel for the defense, housing for defense, all the other stuff we try to do. Oh, they won't touch the entitlements, but they take out most of other stuff in the budget. So it's going to be very difficult. They're going to cut back on the intelligence stuff, but they will be too scared of touching Social Security or Medicare. But it's going to be a different budget, a different country going forward. So they got to stop this. And of course, part of that input to from what I read on the inflation is both supply chain and also wage inflation. And at 3.5% does it. So it's a two-way sword. Anybody's taking claim for that, you got to realize they're also causing the inflation. Now, one more caveat: the inflation we have is global. It's not just us. It's not just us. We're actually lucky because of the what do you got? Reserve currency, demand for our dollar. I would have otherwise it would have been worse. By coming in and buy the dollar for currency translation, so we can park it and earn interest, we actually have financing this shortage. Otherwise, we would be like England, trying to hand out more money. That was the most stupid thing I've ever heard. But anyhow, oh well. I'm sorry, but mistakes happen. Okay, let's go to TD. Oh, by the way, this stuff is killing the real estate, by the way. Okay, Case-Shiller down 19% year to year. I'm not talking about Southwest Florida. I'm not talking about Rodeo Drive. But I'm saying in most markets, most pockets, that's what's happening, 19%. I think Case-Shiller carries 20 cities. Okay, TD. All right. We talked about the spread. Yes, the spread is correct. We're trading long. We're trading long November. October is done, and short February, and that's where we are. So, in a couple of weeks, we'll start to go to long December and then short March, and then we'll roll it over. We talked about the SP2. Typically, these are good timing models for retirement digest. But again, objective is retirement money. The goal is you do 3, 4, 5 trades a year, not more than that. I've probably done a little bit more than I wanted to, but then you have a lot of noise in the market because we've never had this environment. We haven't had 40 years of inflation like this. So that's why the daily trading has been so difficult. If it wasn't for a system, we could have not made the money we've made. I mean, Tico put a few bucks in an account on October. We attached it to the trading chat room live. Is up 130%, 125% up 120 in one less than a month. Next week will be a month. Yeah. So the volatility is good. You're a day trader, but it is good if the bonds go up. If you're a net saver, but in the meantime, your 401k becomes 201k. It gets decimated. So we're challenging times right now. Now, a lot of people got really excited about this. This is the Larry's up and down volume. You can see it on Twitter. If you follow me or follow Tico, you see there's a thread on that with Walter Deemer, Norseman, and another fellow, I forget. That we post our comments. And of course, actually, that's been the massive source of new members joining my Twitter. I mean, it's just, I don't know where they're coming from. Every day, 40, 50 people come in. Of course, a few people I piss off and they leave. But that's okay. That's my nature. I'm testing their willpower. And I say something against their grain and they go nuts and they leave. And still, net, we're doing 40, 50 people a day coming in. Why this chart? Because of the interpretation of this work of Paul Desmond, head of Larry Research in Tampa. And of course, I have a couple of good sources that help me on this. Obviously, Norseman is very good. Walter Deemer, of course, our very own Peter Cook, who wrote this code, the buying power index. A little bit more complex. I don't think you can run on any other system as TradeStation because the input, this is a special input they have. So you could see the charts. Long here, finally, on Russell. We don't have transportation because that needs futures. But this is mid-cap. Long there. We went long and killed it again. So we're in trouble there. And then long here on S&P. Peter likes the longs on these much better than the shorts. But I think the techs have a problem. And it's just this tech wreck is just unfortunately is continuing. You would think we're in a better spot, but we're not. So. Okay. The interpretation here was if we had a 90 or plus day, we actually had it one time, twice now. A couple of days above 90, which is rare in this area. And you have a huge, huge gap up that would go with that. You can see it right there, that gap up there. But I believe the next day is flow through day. I think it was with follow through day. I don't know how to interpret it right, but I haven't seen any of these characters say that we've seen it. A lot of it is done by also Paul O'Neill of is it Paul O'Neill? No, Bill O'Neill, William O'Neill of IBD. Why do we have this? Let me close this. My emails are running. Let's get them out of the way. Okay. What else do we talk about? I'm working on something. It's called Tiger Shark, but it's not for retail, so I'm not going to go there. I know a couple of you have asked that, but sorry. Some of this stuff is really esoteric, and I just don't have the manpower or know how to train, teach, and move forward with that. Let's go back here on SPX 200 day over the DMA. Okay, massive run up. We talked about last week potential bullish divergence. Look how close these were, or maybe at or a little bit below. Look at that pickup. This was as of last week. One more field, and now where we are. So now the game becomes the distance between those two moving averages. If you're a math major, you could appreciate that. You gotta watch that distance. Once it crosses, remember, this is the fast one, the blue. Red is the slow one, 20 and 50. Then the issue becomes that separation. All right. Have we seen the low? I haven't seen the volume. I need to see baby with bathwater. And you will not going to go there because there's a hunky-dory day. No, there's going to be a problem somewhere. So, Don't wish that on anybody, but we need to get a flush, and we're not getting a flush here yet. So something else is gonna give before that comes, and usually involves something big to go down. So, I haven't seen it. So in the back of my mind, I expect another leg down. Okay. That's it for me. We'll do one next week on Wednesdays. There was a talk of doing this twice a month. I may do that depending time. Again, I'm time bankrupt. Maybe we do it every other week. Again, you only sign up once. It's done on their website, right in here. If you go to a website, hit members, and you don't need to log in. Just open. You can go and the link is there. Okay. And then of course, hold on. This is posted here. Let's see. Let me go. This webinar is recorded. Once the recording is finished and post processed, it goes on our YouTube. Best is to subscribe, and this way, the moment you'll be alerted. Obviously, we're getting more people watching things as the systems become better. The system becomes more serious. Timing is really good. It just happens to pick up more and more views, but doesn't matter. It takes us about 45 minutes to post. Why? Because the software has to go through post processing, and the upload is quick. The upload is like compared to it too. And then we post it on Twitter. Make sure you follow us on @Hamzy Analytics. And then, of course, if you really, really want a good treatment, you should be following Admiral Tico, His Royal Highness. He's really the boss around here, and you've seen what he's done about Twitter, about crude oil, about Tesla, all of that. He calls it. And it's just incredible, absolutely incredible. And all I feed him now is what do you call it? His hashtag is Chick Magnets, as you see right there. But we're adding one more that's called Tomahawk. He likes Tomahawk from seat to table. Ani, go ahead. Liquidity risk, yes. I have no idea. Usually in liquidity risk, it's unknown. Yeah, but I can tell how it starts. Okay. Were you trading in what was it? What was that? Was it Dennis? You would remember. Those glitches were mine, Michael. I created that. Yeah, sorry, because not focused. What was that? Was it May 2010? I was in Chicago at the time. Remember we had a problem there. What was it called? Fast something. What was it? That sort of thing. It was where market basically froze. I forget what was it called. It was May 2010, I think it was. The way you see that, Anita, is that you don't have continuous pricing. Okay, so let's say here. Let me bring a live. Let me bring a live screen here. Okay, so this is the dome, right? You see the size? These go away, and the moves are 1-2 points at a time. Boom, boom, like that, moving up, down to the back and forth, back and forth. He jumps across these levels. These basically freeze up. I forgot what it was called back then. No, not Fat Finger. Fat Finger was in the Qs. Yes, May 6th. Yes, Frank. What was that day called? May 6, 2010. Yes. It was the Fat Finger was the Qs, the triple Qs in I was in Atlanta at the time. That was last days of February of 2007. No, but Frank is right. 2006. Flash crash. That's it. Bravo, Thomas. Yeah. The liquidity crisis in the index will be seen as a flash crash. And typically, the market making goes away. And then you get very large moves, 1-2 handles at a time, like on ES, back and forth, and then, whoa, you lose the bottom. Yeah, flash crash. Bravo, Frank. So that's what I would look for. But beyond that, nobody knows. And there's no advanced warning. They won't send anybody an email. Spoofing to start. Could be. Yeah, could be. Yeah, all I know is that we went to a like a DEFCON 1. I called all the staff and I said, at your desk, don't move. Have your phone near you, and because we're not in the local. We're decentralized. We're all over East Coast and West Coast. I'm Chicago. I told Everybody said, get at your desk now. Don't move because something about to happen bad. And of course, about 2 hours later, we had people in the chat room that went bankrupt. You know why? They were using low margin accounts like Infinity. Yeah, Infinity got locked up for several weeks. They did these $500 margins. For 2 or 3 days, they made a killing. Then one day, they went bankrupt. They were crying because the problem was that they couldn't get out. It wasn't that they were bad traders. The whole system crashed. They could not get them out of the position. So they went through the meltdown. Yeah. But no, the liquidity freeze I'm talking about is, you look at the size of the, what do you call it right now? Repos. They're all point to, look at Bank of Japan. They all point to a potential credit facility freeze coming up. And that's not going to be easy. But believe me, if that happens, we put the bottom in. Some bond operation, bond desk is gone, liquidated, evaporated in a few hours. Yeah, but they can't stop it like that. It's avalanche. Best thing to do is get out. Yeah. You don't want to be trading to a flash crash. I mean, I was sick for several days after that. Yeah, they're really rushing you. And I almost lost my account. Yeah, if it wasn't one guy come to my rescue, I would have lost that account big time. My own account, and large it was. I worked my ass off to get it that size. And it turned out it translated to one reversal. I mean, I was getting panicky, and he just said, "Don't freeze fire. You have to reverse." I said, "You're kidding me. It's going to come back." He goes, "No, it's not going to come back." That's a problem. You keep telling yourself it's going to come back, and it gets worse. It gets worse. By flipping, I got a good portion of it back that day, and then took several days off because I was very sick, and then it slowly crawled back up. Because now you're so scared. But remember, there is no advance warning. You don't know. We could have a flash crash tomorrow. I doubt it, but we could. The probability is non-zero. Okay, but I can't tell you. And then either you ask very good questions. The problem is that I don't think anybody has the right answer. I can give you the answer you want, and you probably think that's the right answer, but who knows? It's gonna be different. It's like that Hurricane Ian. I thought it's gonna go to Tampa. It passed north of us 60 miles. That means I missed the missile. You just don't know until afterward. You see it in the rear view mirror. Any other questions for me? Good question, Anita. But you always have good questions. When I grow up, hopefully I can answer them. And this is my boo boo and his duckies. He loves to feed his duckies. Actually, it's part of our rule. We have to do that. Any questions for me? All right, let me close this. We're going to go and get this posted for you. We'll see you next week. Thank you all. Good night. Mr. Petrucci, thank you. Dennis, thank you. See you guys in the morning. Remember, tomorrow is trading day for the system.